TransCentury seeks out companies that are fundamentally viable with a clearly competitive, well-defined market position and good growth prospects as well. At a time when there's so much interest in investing in emerging markets in Africa specifically, talk us through some of the key sectors that are stealing attention in the East African region specifically right now.
Thank you. Right now we're predominantly focused on 4 key sectors. That's power, infrastructure, consumer goods and financial services. Of those 2, it's really power and infrastructure where we would regard them as our leading sectors, where we put the bulk of the focus. And the answer is really simple. I think there's a lot of potential in both of those sectors. The markets are, in our view, highly underpenetrated in terms of the demand is much higher than the provision of services. So from that perspective, I think there's tremendous growth to be gleaned in both those sectors.
Well, we're going to take your word for it, because when I chat to analysts, many of them, the first question that springs to mind is how exactly TransCentury has been able to grow so fast within such a limited period, especially given that you've got such a young team at hand. Are you punching above your weight?
Thanks. Look, I think the reason we've been able to grow so fast is quite simple. We really make sure that we focus on the fundamentals. I think somebody once said to me, I don't understand why TransCentury always buy businesses that require panel beating, was what they said. And the reason is simple. We've really developed a reputation for turning around businesses. We see opportunity often where other people don't. And from that perspective, we typically tend to buy very well. But having done that, we really focus on extracting the value out of these companies. So I'll give you an example. I think what we're best known for is, for example, our cables business. East African Cables, we bought in 2003. It was just one asset. It was relatively small, had a turnover of about $500,000 a year. Today, that's grown into a platform of businesses with assets across Kenya, Tanzania, Zambia, South Africa and DRC, and is well over $100 million business today. And we've done that by simply focusing on really understanding the market, really understanding how to get our products to that market, and focusing on very rigorous implementation and execution, strengthening the management team, and really understanding what are the key value drivers for our business.
Well, that may well be one of the investments that's made headlines over the recent past. Yet another has been your investment with regards to Rift Valley Railways. There are questions about the political influence in that investment that you've made there. Your response?
I'm not sure what you mean by the political influence questions, but I think that's again another fantastic investment in our view. I think quite simply, Rift Valley Railways, or let's come back, the railways itself in about 1980, which is 30 years ago, moved about 4.5 million tons of cargo. Today it only moves about 1 million tons of cargo, so less than a quarter. Over that 30-year period, the East African region has grown tremendously, and the economies are much larger. So the potential for RVR is tremendous. What's really holding back that investment is really getting effective management and effective investment. I think to answer your political question, I think the issue is that the assets still belong to both the governments of Kenya and the government of Uganda. And in any regulated market, you must understand and work in very close partnership with the governments.
Well, talking about partnerships, a trader I was speaking to earlier this morning said that we've got South Africans and Egyptians with strong stakes in this investment as well. With that being the case, what gives you the assurance that you would have a strong enough handle on this investment, given the fact that we've got the South Africans and Egyptians coming in with more technical know-how, more experience within that field?
I think that's it's a misnomer in terms of sort of more technical know-how, more experience. I think 3 things have happened. One is that the concession was actually, as you correctly say, given to a South African player. I think, unfortunately, it wouldn't be, I don't think anybody would argue with the fact that that particular player has not been able to deliver value for the concession. So I think the point now is, how do we move forward from that perspective? And I think the questions that you're raising are around, should this be driven by, a domestic player which already has huge experience in terms of turning around businesses? We've committed to injecting significantly more capital, and we've, committed to identifying, a very strong management team, which we already have actually. And thirdly, we've also got a very strong technical partner on board. Yeah. I think what you're maybe mentioning is the potential acquisition of the South African stake by an Egyptian player. I think both TransCentury and Citadel Capital are both sort of private equity players, so I think to be unfair to say that we have less experience in terms of running railways. Okay,
well, that answering just some of the questions that are out there. We know as well, Gachao, that the ICT sector is a burgeoning one over on the East Coast. Let's take a look at your involvement within that space and how you see prospects unfolding in that arena.
Actually, today, TransCentury's involvement in the ICT sector has been relatively limited in terms of direct involvement. Indirectly, of course, we are huge providers of infrastructure, so we actually sell a lot of the data cables that have been used for the infrastructure expansion, but that's really what our involvement has been limited to. We do have some of the TransCentury shareholders themselves have invested in the ICT sector, but that is not TransCentury's focus today.